What's happening, investors? AK here, bringing you the noise, where we analyze the market and business news that you need to know. Let's go! Today we're going to be answering the question, should you be buying gold right now? With all this crazy market volatility, is gold a good investment? Well, take a look at this monthly chart for gold. It's about to complete an inverted head and shoulders pattern, and if it does, we should see prices trend higher. What's interesting about a break higher in gold is how it will affect the US dollar. Gold tends to have an inverse correlation with the dollar. If gold is trending higher, then the dollar will trend lower, and vice versa. And the reason for that is because gold acts like an anti-dollar. It's both a safe haven and an inflation hedge. So when the dollar starts weakening, people start shifting their money into gold because they see it as a better store of value. But for some reason, in this relationship between the two, gold actually leads the dollar. So if gold actually manages to break out here, we should see a leg down in the dollar. And that would kick off a reflexive loop where, as I just explained, a weaker dollar would encourage even more investors to get into gold. And that'll fuel the gold rally even more, pushing the dollar down even further. And then the cycle would keep repeating. Now there's a few other factors working for gold here too. In his book Hedge Hogging, Barton Biggs notes that not inflation or deflation is the principal driver of gold, but the return from other long-term financial assets, particularly equities. What that means is that gold tends to mirror the demand for US assets like stocks and bonds. When there's a high demand for US assets, gold falls. And when there's a low demand, gold rises. Take a look at this chart. The yellow line is the performance of emerging market equities versus US equities. So if the yellow line is trending higher, it means emerging markets are outperforming the US. And if it's trending lower, the US is outperforming emerging markets. The blue line you see is the price of gold. It's easy to tell that the two lines are correlated. That means that when emerging markets outperform US stocks and there's a low demand for US assets, gold rallies. And when the US outperforms, which means there's a high demand for US assets, gold prices fall. This correlation is even easier to see on the 3-year rate of change basis. So basically, relative equity momentum drives the trend direction of gold. And from this chart, you can see that the major transition and outperformance between emerging markets and US equities over the last 2 years looks very similar to the 99 to 01 period. And that period ended up being the start of a major bull market in gold. So if this analog holds and emerging markets continue to outperform the US, then we should see gold start another bull market soon. There's also more money flowing into gold right now, which is supportive of a move higher. The charts of a number of gold miners look pretty good too. This is a chart of one of the plays we're looking at, South African miner AngloGold Ashanti, ticker symbol AU. It's possible to play this trend through a gold miner like AU or the gold ETF GLD. Now the macro has been pretty noisy lately, so it's tough to know if this is really the start of a bull market in gold. And that's why it's a good idea to wait for price action to confirm first. And of course, before you make any moves yourself, you should do your own research and stick to your investment plan. Do you think a new bull market in gold is about to begin? Let me know in the comments. And don't forget to subscribe to this channel and hit that bell for notifications of new videos. Markets are crazy right now, so remember to stay fallible out there. I'll talk to you soon.